a warning sign for the stock market as the bubble is ready to burst and it's going to take down the entire economy with it. I have all the details and what just happened that's sounding the alarms right now. Let's get into it and talk through the details. All right, now this past week here was the best week for stocks this entire year. We saw a massive rally on Wednesday, followed up by more gains on Thursday and even more gains on Friday, making it the best week so far this year. Now you would think in general, what's wrong with that? Sounds pretty good to me, right? Yeah, no, I agree with you. It's totally awesome when the market goes up. That's a really good thing for virtually everybody who's invested in the market in any way, shape, or form. Whether you have a 401k or you have a brokerage account or whatever it happens to be, generally it's a pretty good thing for most people. However, something just happened, and again, I want to bring this to your attention because this is something that always happens usually at the end of a bull market and not necessarily such a good thing, but yet we kind of just saw this happen this week. And again, I want to pull this out for you so you can see what's going on here and just let you know, hey, if we see this market roll over and we see a massive collapse in the market, it's going to take down the entire economy with it, okay? And I mean, here's the thing. There's a lot of predictions out there right now suggesting that we are already in a recession. Now, it's obviously not confirmed yet because by the time that we actually get the confirmation of a recession, we're already like 6 months into it at that point, right? It takes a long time to get that confirmation, but there's many different aspects and economic data points, even like the jobs number that we got just a few days ago saying, oh, wow, that's really bad, showing that this economy is way weaker than they're actually anticipating. But let me show this to you really quickly and just check this out. So this past week, we saw, according to Bank of America, $20 billion that was brought into the markets by investors. Now you'd think, what's wrong with that? $20 billion getting plowed into stocks and equities and things like that, not a bad thing. Generally, I agree. It's probably a pretty good thing. However, you don't want to see a huge influx of cash coming into the markets when they're already at the highs that they've been sitting at. Now, here's the thing. Leading up to this huge rally that we saw this week, just this, the last few days here, leading up to this, we already saw the market going up pretty substantially over the last couple of weeks. It's been going up and up and up virtually every single week. And now on top of it, we get this massive blow-off top rally going into that. Again, we are so far extended at this point. And again, like they say, right, the saying in the market is the market can stay, what is the saying? It's something like the market can stay irrational for longer than you can stay solvent. Something like that. My point is, yeah, absolutely. It can continue going on like this for a long time. But considering we were coming into this with a big rally and we're already moving higher significantly for the last couple of weeks, and then we come in with this massive, best week of the year rally where we see $20 billion plowed into the market and the record inflows into financials of $2.9 billion. Again, you don't want to see that at the top of a market. Now, if you were to see this kind of activity at the bottom of a market, at the bottom of a correction, or at the bottom of a, massive move lower, something like that, that's fine. Nothing wrong with that at all. When you see a huge move higher, that's to be expected, right? But when you see the markets moving up as high as they are, and then all of a sudden another huge rally on top of it, that starts to, sound the alarms. And a lot of things are not making a whole lot of sense because it's just not necessarily a good thing. Now, here's the thing I want to point out really fast as well. You see this all the time. You hear professional traders talking about it. You hear, professional investors. You read about this all the time. Who comes into the market at the very top? Who? The professionals? No, they come in and they're shorting and they're selling at the top, but no, they're not buying at the top of a market. Who buys the top of a market? Retail investors. Historically, that's who comes in every single time at the top of a market. You see this huge blow off top in the market. Retail investors plow in, come in, and this is a great time to buy. And then the institutions, the professionals, the hedge funds, the guys that have hundreds of millions, billions upon billions of dollars, hundreds of billions of dollars, they're in there, they're selling, they're shorting, things like that, right? Kind of the same situation here. Now, again, this market could easily continue moving higher. All I'm saying is that considering how much we came into this market up, or this week, I should say, we came into this week moving higher for so long, we had this huge rally on top of it, we're just getting so far outside of the realm of where we're supposed to, or like kind of like the normal movements of the market, right? We can certainly move with, big moves higher or lower. It doesn't really matter. That's fine. But considering how much we've gone up here over just the last little while here, it's getting to be a little bit extended here and kind of moving up apart from the standard deviation, right? But here is the biggest concern that I have about this. is the massive inflows. That's the part that I'm concerned about, because we know this historically every single time. Who marks the top of a bull market? Retail investors, retail traders do. That is who's buying the top of a market literally every single time. So when you see this coming in like this, and big moves higher like this, record weeks, record days, stuff like that, new all-time highs, you see all of this in just huge green candlesticks going up. And then all of a sudden you see these reports like what I've been showing you here in this video of record inflows. That shows a massive warning sign like, oh, okay, massive inflows. It's definitely not professionals coming in and buying right now. That's absolutely nuts. No professionals are coming in and investing in this market at this point. I mean, maybe a couple people for very short-term trades, but for the most part, they're not coming in, taking long-term positions after this big move higher like this and just saying, yeah, we're buying here. We think there's value here. There's not value. There's value on the short side for the most part, right? So anyway, we could see what happens here going forward, but based on what we've seen just the last couple of days here, based on the new decisions coming out, stuff like that, but we could see in the next couple of years here, according to this article that I shared with you, and you probably saw it there as well, but let me just say it really quickly, they're saying up to $8 trillion in tax cuts, $3 trillion in revenues from tariffs, and about $1 trillion in reduction of spending. So it's a lot of money moving around. I mean, that's a total of, what is that, $12 trillion, all of those added up. It's a lot of money movement, right? So my point is, we could see some massive volatility going forward and maybe a little bit indecision going forward as well. Just saying. I'm not saying this is advice in any way, shape, or form. It's definitely not. This is not advice. It's not financial advice. It's not investing. It's not trading advice at all. All I'm saying is that just don't be shocked at all if we see this market come down pretty substantially here at some point soon. And again, who knows? It'll keep going up probably. That's fine. But all I'm saying is that the more that it moves higher and gets away from standard deviation, I mean, equilibrium essentially, just the higher likelihood we're going to come crashing back down to that. So we could easily see some kind of move back down, 3%, 5%, 10%, 12%, something like that easily, and it probably would happen relatively quickly. That's all I'm saying, okay? Is it a buy the dip opportunity? Possibly. Love to see what it looks like at that time. That's all I'm saying for you. Anyway, just want to bring this to your attention really quickly. I don't know, a little bit of alarming. That's what I have to say, just watching the markets as long as I have been. About 15 years now, watching the markets literally every single day and watching all this stuff. I mean, you see the same patterns all the time happening like this. It's just a little bit of a concern in my opinion. So, just want to throw that out there really quickly. I want to share this information with you. I hope you find this to be helpful. Otherwise, please leave your comments, your questions, your feedback down below. Again, if you're new here or if you haven't done so yet, please make sure to subscribe as well. Again, totally free to do so. Big subscribe button down below. Thank you so much. Really appreciate it. Otherwise, if you know one or two people that you can think of that may find this information to be beneficial or helpful or interesting, please feel free to share this video with them. The share button right down below as well. Thanks again. Really appreciate it. Otherwise, like the video, thumbs up button down below. Thank you so much. And make sure to check out any of the other 5,000 plus videos here on the channel. The popular videos I've hand selected for you down below in the description at the top of the comment section and right now showing up on your screen as well. You'll see some videos there. Thanks again. Enjoy. Take care. Have a good one. And I'll catch you again later.